Shares of Intel are down close to 9% after reporting the latest earnings report, a mixed report for Q1 and then a miss on Q2 guidance. At the time of making this video, more specifically, shares are down 8.29%. So yes, you now can get this company a bit cheaper than before. Year to date, the stock is already down close to 13%. Now, with the added pressure from this quarter because of weakish guidance plus the added pressure from Intel Foundry, it's still quite a money-losing business. We've known that since they announced that, I think, a week or two ago. So all of that has added to the pressure. Now, there were some positive-ish points in that report, which we're going to discuss in just a second. By the way, if you missed, I already covered Microsoft and Alphabet's earnings report. Those will be in the top right corner. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, as a small reminder, I personally own Intel. It's, I think, one of the only few semiconductor companies that I actually own in the portfolio currently. That's because, well, I believe in the turnaround story. Yes, of course, I could have chosen Nvidia, AMD, ASML, TSMC, you name it, and my life would have been much, much better with regards to this company. But that's why positioning, portfolio allocation is quite important. It is not nearly as big as a position as some of the other holdings, such as Meta, Google, Mercado Libre, Amazon, Tesla, etc., etc. Now, enough of me rambling on my bag holding. Let's have a look at the numbers. First, I want to start with some comments here from the CEO and CFO. So Pat here says, we are making steady progress against our priorities and delivered a solid quarter. Strong innovation across our client, edge, and data center portfolios drove double-digit revenue growth in Intel products. With Intel 3 in high volume production, leading-edge semiconductors are being manufactured in the United States for the first time in almost a decade, and we are on track to regain process leadership next year as we grow Intel Foundry. As for the CFO, Q1 revenue was in line with our expectations, and we delivered non-GAAP EPS above our guidance, driven by better than expected gross margins and strong expense discipline. Looking ahead, we expect to deliver year-over-year revenue and non-GAAP EPS growth in fiscal year 2024, including roughly 200 basis points of full-year gross margin improvement. Now, I do want to mention one extra thing here because it's an added aspect to the report. That is with regards to Altera. This is an Intel company previously that was included in the Programmable Solution Groups, or PSG. Altera is basically Intel's equivalent of AMD's Xilinx, to put it in simple words. Altera was previously included in Data Center AI segment results. As a result of these changes, the company modified its segment reporting in the first quarter of 2024 to align to this new operating model. Couple of highlights here, one from the client computing group. So as of the end of the first quarter, more than 5 million AI PCs have shipped since December 2023. Intel expects to exceed its prior forecast of 40 million AI PCs by the end of 2024. I basically have been talking about this for quite a while. This is a tailwind for the likes of Intel and AMD, with AI PCs becoming more and more of a thing. Refresh cycle, Windows 12, expect that to be a tailwind for the likes of Intel and AMD. As for the data center and AI segment, they introduced Intel Gaudi 3 AI accelerator, projected to deliver on average 50% faster inference and 40% greater inference power efficiency than NVIDIA's H100 on leading generative AI models. Of course, NVIDIA already has H200, Blackwell, so yeah, do with that information what you want. And then lastly, a quick reminder with regards to Intel Foundry. So Intel Foundry announced at Direct Connect an increased expected lifetime deal value for external customers of more than $15 billion. And so the Q1 highlights. So revenue came in $12.7 billion. That's up 9% year over year and flat from the January outlook. Gross margin, this is non-GAAP now, but they wrote here GAAP gross margin, that's 41%. That's up 6.8 percentage points year over year. On non-GAAP here, that's 0.6 percentage points above the January outlook. So, okay, that's fine. EPS non-GAAP 18 cents. GAAP was a loss of 9 cents, up 57 cents year over year. But here, non-GAAP, that's up 22 cents year over year and 5 cents above January outlook. So as you can see, we have here a new segment reporting, a new style, basically Intel products, but we can just look at what we're used to. So CCG, DCIA, as you can see right here, operating margins have come down quarter over quarter. Q1 is usually a weakish quarter, but yeah, I mean, for data centers, really not that great. They say here Gaudi 3 launching in Q2, over $500 million in revenue in the second quarter. So yeah, let's see if we can see a nice reacceleration and nice exit towards 2025. With regards to the client computing group, we've talked about that. The AI PCs, they say here second gen AI PC shipping in volume in the second half and Panther Lake in fab now. With regards to Intel Foundry, I mean, operating income here, operating margin, quite a disaster currently. They say here that the path to break even is largely in their control. Of course, they now also have ASML's machine, right? The EUV that will definitely help them as a business. And so over time, I mean, I do think that Intel Foundry is going to be a success and it's going to be quite a big revenue and profit generating segment for the business. Then with regards to Altera and Mobileye, so Mobileye, their revenue for a quarter was $239 million. Operating income, a loss here, $68 million. Operating margin negative 28.5%. They say here IQ inventory digestion on track, plus business environment accelerates post Q1. With regards to Altera, we've also seen this weakness already with Xilinx with AMD last quarter, so this is not really a big surprise. They say here industry-wide inventory digestion continues, expects around $2 billion revenue run rate exiting 2024, so probably closer to $500 million a quarter. And then Q2 outlook, this is the miss here, so they expect revenue to be flat year over year to come between $12.5 to $13.5 billion. Analysts were expecting a bit more than $13.6 billion. As for gross margin non-GAAP, 43.5%, up 3.7 percentage points year over year. And then EPS of 10 cents, also non-GAAP, and that will be down 3 cents year over year. And so if we look at the graph, of course, since the highs back in late 2023, start of 2022, where we've come down quite a way, since the drop under the 200-day moving average, stock is down 16-17% or so. And so right now we're in an area where previously I think we have found a little bit of a support. In my opinion, I think for long-term investors, of course, this is on the weekly, so expect tomorrow to be very, very close to oversold or actually being oversold unless something major gets mentioned during the earnings call. That will be in the pinned comment. I will probably be looking to add a little bit here on Friday. So overall, with Intel, the story continues. You just have to be patient as an investor. Yes, it's true. Picking Intel over others, opportunity cost, I mean, you're probably leaving some money on the table for quite a while, but if it works out, I do think that long-term shareholders that are patient are going to be rewarded quite handsomely. Now, of course, me holding for quite a while, I mean, since a bit after Pat came in, I could have just waited until I saw results, but okay. Lesson learned. I mean, this is a learning journey. I'm fine with my positioning. I'm fine with my allocation. I will be adding a little bit more because I do think that this dip provides a nice opportunity for me as a long-term investor. I don't see the thesis being broken anytime soon. It's true. It is capital intensive to turn that Chipzilla around. So yeah, I mean, let's wait and see what happens. Overall, that's about it. Do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.